What's up, everybody? Michael Silva here to do some technical analysis on the S&P 500. Today's video is going to be quick, short, to the point. Sorry it's getting out to you later, but I've had quite some workload on me today. We're going to look at the daily time frame and the 30-minute time frame. Let's go ahead and get into it. All right, so we are here on the daily time frame. One thing that I want to point out is this trend line kind of going up through here. It looks as if that the bears have pushed the price below that trend line. I think we got to give it maybe just a little bit longer, a few extra days to see if it's really going to break this longer term trend line here. And by longer term, I'm saying a few months. It's not quite long term. I'm going to go ahead and remove that for right now and zoom into the current price action. Now, as we know, earnings week is here. It's among us. We have some big companies reporting earnings, so there's going to be more volatility leading up to then, and that could be what we are seeing right now. This red rectangle up here is the bears camp. That is a zone of resistance. The green one is the bulls camp, a zone of support. As you can see, this 32.35 level, the entrance into the bears camp, has been a little pesky, which you'll see more on the 30-minute time frame, but the bears were able to push the bulls back outside of it, so the bears have taken complete control over their camp once again. The level to keep an eye on here on the daily time frame is still going to be 3,200. It's going to be right here. Any break below that would probably bring the price down to, my guess, 3,150. Maybe potentially a little bit higher, 31.55, because you can see it acted as resistance here and then also support around this area. But it's a zone, it's a range. It's never quite just perfectly touching it. I mean, every once in a while it does. I think that the market has a floor in at 3,000, so I don't see necessarily the price breaking under 3,000, but if it does break down 3,000, that could be a very good time to get out of the market, because if the bears have that kind of momentum to the downside, we might be seeing the market continue that rollover. Now, I've been saying this is a buy the dip, sell the rip type of market, especially what the Federal Reserve is doing to supply liquidity into the markets. They are going to be wrapping up their two-day meeting on Wednesday, so we'll hear from them soon. Let's go ahead and hop into the 30-minute time frame to map out some support, resistance, and kind of just get a good feel as to where the market might be heading tomorrow. All right, we're here on the 30-minute time frame. This blue vertical line going down the stream represents where the day began. So as you can see, we did have a gap down, and these levels here, this green level here, which is 32.27, 32.35, those were our areas of support that we mapped out yesterday, and this red level up here was our area of resistance, as well as this 50-period moving average. And as you can see, really the price just kind of gap down, moved lower into our area of support. Not quite touched down right on it, but as you can see, the support did hold. And then really from that point, we saw it bounce and really just move sideways throughout the remainder of the day. Some pretty choppy moves, but this was right around this really pesky area of support that we mapped out at 32.35. And now obviously that we had this gap down, so on yesterday's close this area acted as support, but because it gapped below it, then it automatically becomes an area of resistance, and you could see that it acted as resistance and then held as support. So it was just a very choppy area. We had a little bit of a bump up towards the end of the day, but ultimately the last 2 hours, the market really took a nosedive, not ever testing that head and shoulders, kind of sloppy head and shoulders pattern that we really kind of mapped out yesterday, where we said the neckline was pretty much like right around this range, from about here up to here, that kind of range. And as you can see, we never really got a close above this candle. So that is a failed pattern. You no longer need to look at that. Let's go ahead and map out our new areas of support and resistance so we can really get a good idea as to what might happen tomorrow. As far as support goes, I'm going to go ahead and put it back down to 3,200. That is going to be the level to keep an eye on. As far as resistance goes, that is going to be 32.35. Now, I think it goes without saying why 32.35 is an area of resistance. That is the entrance into the bears camp, and clearly it's been a very pesky number for multiple days here for the price to get clearly above it or stay below it. 3,200 does have price history in the previous portion of the chart, as you've seen on the daily, of 4 or 5 days tapping down and 3,200 holding strong. So it does look like the market is rolling back down to that 3,200 level eventually here to test it, but we'll see if it makes it down to this 3,200 or even reaches below it or bounces from it. Right now we just need to look at these two main levels here, because We have so many things going on this week. Like I stated before, we have the earnings and then the Federal Reserve meeting. So just proceed with caution, trade with caution. There's one thing that I did forget to point out on the daily time frame. So let's just go ahead back to the daily just so I can go over the negative divergence on the RSI. Okay, so I just wanted to point out this negative divergence on the RSI. As you can see, this high right here is a lower high compared to right here. And then on the RSI indicator, you have a high right here, and then you have a lower high right here. So you have the RSI moving lower, and you have the price action moving higher. This right here is a negative divergence, and negative divergences, you need to proceed with caution. You need to watch out for these type of things. Typically, negative divergences on the MACD are a little bit more stronger and more of a warning sign to keep an eye on, but that doesn't take away from the fact that this is still something you don't want to just overlook. Typically, what you can see with a negative divergence is more of a pullback in the current price action. But will the Federal Reserve really allow this market to completely roll over and crash? I don't know. I guess we'll see. That's all I have for you on today's S&P 500 technical analysis. See you later.